Well, good afternoon and welcome to the market wrap for Friday, the 6th of March. We finally reached Friday. It's been a very volatile week, not only for the Australian market, but for global commodity markets, currency markets and equities as well. So here in Australia, we've had both ups and downs over the course of this week. But look, today, ultimately, we slid by around 1%. That's after being down a little more earlier on, down by 1.4%. So we did pare back some steeper losses as the day went on. But look, we did have our biggest weekly decline since April as investors continue to monitor the ongoing conflict in the Middle East. So we saw a loss of around 4% over the course of this week. But look, it is quite easy to get caught up in all of the headlines. So context is very important here because yes, it's been a volatile and uncertain week. You can't deny that. But this time last week was a vastly different story. We had hit a couple of record highs last week. We wrapped up our best month in almost a year and our best February since 2019. So remembering we were at record highs, if you go back just 6 trading days, should at least provide a little bit of comfort. But I guess the question remains how long the conflict will go on for and how wide it could spread, because the longer it drags, the more concerned investors may get. So we'll be taking it day by day. Now, before we look at the different sectors, I do want to say today's falls were primarily driven by the materials sector. If it wasn't for the more than 4% drop in our second largest sector, it could have been a very different story today. We have seen gold prices under pressure, posting its first weekly drop in more than a month, pressured by a stronger US dollar and also expectations that the US might have to push out its next interest rate cut due to higher oil prices, raising inflationary pressures. We've also seen higher expectations for more rate hikes here in Australia, with investors now worried about the potential for 2 more rate hikes before the end of the year, while before all of this, markets thought 1 more rate hike was likely. So those factors weighing on the gold price and the gold miners on the Aussie market as well, with the gold sub index down by around 9.5% over the course of this week, but notably from a record high just on Monday. So that definitely weighed in the material space in today's session. We saw, of course, the commodity on everyone's lips is oil. We've seen gold prices rally by almost 20% this week, but it's been somewhat interesting to see energy stocks not doing quite as well, up by over 7% over the course of this week, while the energy sector ended pretty much flat in today's session. And tech, while it has been an outperformer for the past couple of days and one of the better performers over the course of this week, it was up 4.5% today, which could be a case of bargain hunting with the sector near a 2-year low. So a bit of sector rotation appearing there, with miners, which were recently doing best, to now tech, which were underperformers recently. But if you look across the other sectors, not huge moves. You can see communication services were up by 1.7, just a small dip in the financial space, down by around 0.25%. Healthcare edging higher, and some of the other sectors posting relatively small moves as well. Now, today, plenty of examples of tech names doing well, like WiseTech, Xero, Megaport, and Catapult Sports, with analysts noting that companies showing that they are using AI to lower costs or raise revenues are performing better. Elsewhere, Magellan has been a strong performer once again today, and the best performer over the course of the week, lifting by 36%, vastly outperforming the broader market, of course, which was down over the course of the week. And healthcare imaging firm Pro Medicus was another bright spot today, but has been an underperformer so far this year, with its share price down around 40% in year-to-date terms. Now on the losers list, uranium miner Deep Yellow did worst after recently pushing out a big development decision for its flagship project in Namibia to later this year. Now this project was expected to help the miner grow. So a few question marks raising eyebrows by investors, but look, it also, what didn't help was the uranium price, which has been under pressure as well. So that weighing on Deep Yellow's share price, down by around 12% today. And many stocks in the mining space adding a lot of pressure today, with BHP alone weighing the market down by 35 index points. It was down by a little over 4%. And gold miner Catalyst Metals doing worst on the ASX 200 with a decline of a little over 11%. Now on to currencies. We have seen quite a choppy Aussie dollar over the course of this week. It got as high as 71.2 US cents. Earlier in the week, it dipped below 70 US cents, but it's currently sitting at around 70.3 US cents, firmer against the other currencies there as well, including the euro and the yen. So looking ahead from here, investors will be monitoring the developments in the Middle East over the course of the weekend. Now, as it stands right now, US futures are pointing to a small lift when the market opens tonight, but that's still in several hours. And of course, something that's been somewhat overshadowed but remains quite important is US jobs data, the non-farm payrolls, which are due to come out later tonight. So that's going to be the key data point that investors are going to be focusing on. And that's a wrap for this week. Have a lovely weekend, and I'll see you again on Monday.